The IRS is sitting on $1.2 billion that belongs to American taxpayers, not corporations, not Wall Street, regular people, freelancers, gig workers, 1099 earners just like you. And for most of them, that money is already gone. Not because the IRS stole it, because they simply didn't know the deadline existed. Today, I'm going to show you exactly how this happens, who it happens to most, and if you qualify for the July 15th window that is still open right now, how to get every dollar back before the IRS keeps it forever. Let me give you the real numbers first, because this isn't speculation. The IRS officially confirmed that over 1.3 million Americans have unclaimed refunds for the 2022 tax year alone, totaling approximately $1.2 billion in money that has never been collected. The median unclaimed refund? $686. But here's what that number hides. That's the median across all filers' W-2 employees, retirees, part-timers. For 1099 workers and freelancers, the picture is much bigger. Because when you add up the deductions most freelancers never claimed on their 2022 return, home office, mileage, self-employed health insurance, the SE tax deduction itself, we're talking about $3,000 to $4,000 or more in missed savings per person. And as a self-employed worker, you already carry 15.3% self-employment tax, the full Social Security and Medicare burden on top of regular income tax. Every deduction you miss isn't just a number on a form. It's real money leaving your pocket and going straight to the federal government. So how does this keep happening? Let me tell you a story. Meet Marcus, freelance web developer. 2022 was a rough year for him. 2 big clients fell through, income dropped, and when tax season came around in 2023, Marcus thought to himself, I barely made anything. I probably don't even owe taxes. I'll skip it this year. That was a reasonable assumption. But here's what Marcus didn't know. When your income drops as a 1099 worker, you may have actually overpaid estimated taxes earlier in the year. That overpayment, the IRS holds it as a credit. Marcus had $740 sitting in IRS credits from his Q1 and Q2 estimated payments. But to collect it, he had to file a return. And under federal law, if you don't file within 3 years of the original due date, that money permanently becomes the property of the U.S. Treasury. Marcus found out about this in March 2026, 3 years and 11 months after that original 2022 deadline. He had 2 weeks left. He scrambled to gather his 2022 1099 NEC forms, bank records, and home office documentation. But here's the real villain in Marcus's story. It wasn't the IRS. It was the 3 deductions he never knew he could claim. Number 1, the home office deduction. The IRS allows deductions for portions of your home used exclusively for self-employment work, from rent to utilities. Marcus had a dedicated desk set up in his 2nd bedroom. He never claimed a dollar of it. Number 2, business mileage. Every trip to a client site, a co-working space, or a supply store. The 2022 IRS standard mileage rate was 58.5 cents per mile for the first half of the year and 62.5 cents for the second half. Marcus drove roughly 4,200 miles for work that year and claimed none of it. Number 3, the self-employment tax deduction. Most 1099 workers don't know this exists. The IRS lets you deduct half of your self-employment tax directly from your gross income. On a $45,000 freelance income, that's roughly $3,180 you can deduct before your income tax is even calculated. Marcus had left all 3 of these on the table for an entire year, and he almost left them there permanently. But wait, here's what your accountant probably never told you. Even after April 15, 2026, the window isn't completely shut. Because the IRS extended the 2022 filing deadline to July 15, 2023, in certain federally declared disaster areas, The 3-year statute of limitations for those taxpayers runs until July 15, 2026, not April 15. If you lived or worked in a federally declared disaster area in 2022 or 2023 parts of California, Mississippi, Alabama, Georgia, and several other states, you may still have until July 15, 2026 to file your 2022 return and claim that refund. We're going to link the full list of qualifying areas in the description below. And even if you don't qualify for the July extension, this story isn't just about 2022. It's about every year you're leaving money on the table without realizing it, and exactly what to do about it starting today. Here's your step-by-step action plan. Step 1. Find out if you're owed a 2022 refund. Go to IRS.gov and use the free tool called Get Transcript Online. This tool lets you pull a wage and income transcript showing all the 1099 and W-2 information the IRS already received under your Social Security number for 2022. If your payments exceeded your tax liability and you never filed, this transcript will show it. Takes about 10 minutes. It's free. Step 2. Check your disaster area status. Visit IRS.gov/DisasterTaxRelief and search for your county and state. If your area received a federal disaster declaration linked to the 2023 extended deadline, your 2022 refund window stays open until July 15, 2026. Step 3. Gather your 2022 deduction records, even now. If you're filing a late 2022 return, you can still claim every deduction you qualify for. Dig up your home office square footage and total home expenses from 2022. Use IRS Form 8829 or the simplified method $5 per square foot, up to 300 square feet. No receipts required. Your 2022 business mileage. Check your Google Maps history, old calendar appointments, or bank statements showing client site visits. Even a rough but documented estimate beats zero. Any health insurance premiums you paid as a self-employed worker in 2022. These are fully deductible from your gross income on Schedule 1, line 17. No itemizing required. Step 4. File the 2022 return. Prior year returns often must be mailed rather than e-filed. Use tax software that supports prior year returns, or hire a CPA who handles back returns. The IRS does not charge a late penalty when a refund is owed, only when you owe taxes. So filing late to claim a refund costs you nothing in penalties. Step 5. Set up a deduction tracking system right now for 2025 and beyond. Open a free Google Sheet. Create 4 columns: date, description, category, amount. Every business expense gets logged the same week it happens. Gas receipts, software subscriptions, client lunches, equipment purchases, everything. At year end, you hand this sheet to your CPA or drop it into TurboTax Self-Employed, and every deduction is already accounted for. This one habit alone is worth $3,000 to $5,000 in documented deductions per year for the average freelancer. That's not a rounding error. That's a car payment, a month of rent, a real number. If this video just saved you from missing a deadline or helped you find deductions you didn't know existed, subscribe right now. Every single day on this channel, we publish tax tips built specifically for 1099 workers and freelancers, tips that save you thousands every year and keep the IRS out of your wallet. Hit the subscribe button, turn on notifications, and join 1099 workers across America who are finally keeping more of what they earn. See you in the next one.